Hello Longhorn.
Hello Longhorn.
Hello Longhorn.
Hello, Longhorn. This is a Texas Exes podcast introducing you to Longhorn entrepreneurs and business leaders. I'm Sara Light, and today we have the CEO and founder of Peachtree Group, Greg Friedman. He got his degree in biology from the College of Natural Sciences here at the University of Texas in 1999, and now he owns this huge investment firm. So here's Greg Friedman. The whole goal of this podcast is to show, like a Longhorn did that, and to show all the different things that Longhorns are doing from big to small. And I want to highlight people from all different industries and all different majors. And it's really easy for me, as I was saying, you know, if somebody created like a fitness piece of equipment that I use, I'm like, cool, that's so cute. How did you start it? And I get really intimidated by numbers and finance because it's just not the world. I was an advertising major, and then I did morning radio for 20 years.
Oh, wow.
But we haven't had anybody in real estate. We haven't had anybody in investments.
Sure.
And, you know, you've been a Longhorn 100 winner 3 times, and you're a business member, but also you run this huge firm, and I just wanted to have you in, but you're going to have to talk to me. I'm going to ask probably very base level questions about what you do.
Yeah.
A lot of people probably know exactly what you do, but I'm not one of those people.
Right. Well, most people struggle with it. So it's not uncommon. People don't understand exactly what we do because it is a little bit unique. But what is more unique is that a lot of people think I majored in business. Or I got a real estate major at Texas. And actually I was a biology. So I was technically a scientist that was going to be a doctor. Yeah. And had no aspirations or dreams necessarily to do what I ended up doing, but ended up falling in love with it and sort of fell into it.
Okay, well, I like that you started that way because that was going to be, first of all, I want to know why you chose the University of Texas, but College of Natural Sciences, if people decide not to become a doctor, I think sometimes they're left with, what do I do? And you were a biology major. And yes, if I had not known, I would have said Macombs grad all the way, obviously. So why did you choose UT?
Yeah. So originally, I skipped a year of high school. So I'm going to I can give you a very long answer. I can give you a short answer, but I'll just give you the short answer. And if you want more details, I'm happy to give. But I skipped a year of high school. So there was, at the time I graduated when I was 17 years old. So I skipped my junior year of high school. And, at the time, Texas sent me a letter saying, hey, if you have a certain GPA, a certain SAT score, you're automatically admitted. And I qualified. So I automatically got into University of Texas at Austin, and Texas was on my top 5 list. There was a lot of other schools I was looking at.
Were you from Texas? Are you from Texas?
At that time, I lived in Dallas.
Okay.
So I went to high school in Dallas at Plano Senior High, and I was looking at potentially going out of state, but it was just sort of the easy button. So I don't feel like I usually take the easy path because usually I tend to have more. I tend to create more challenges for myself than, taking that easy path. But in this case, I took the easy path and came down to Austin and fell in love with the school, the first time I came to visit. So I was like, this is an easy choice. So.
And where'd you live freshman year?
So I lived at University Towers.
Oh, fancy. Yeah, that's cool.
Yeah, now it no longer exists. So,
I know.
But yeah, it's funny. I've run by there a couple of times and it's like, wow, just looking at all the development that's occurred around that area, it's amazing. So.
It's hard to recognize, but Towers was definitely one of the cool spots of the, like, oh, you lived in an apartment, not a dorm. Right. Is what it felt like. And then you chose biology. So why biology?
Yeah, so I was going to be a doctor, and biology I loved in high school. I was like very much into biology and chemistry, and really just going back to when I was a kid or a child. My grandfather he was a doctor by trade, although he was very successful in business, and he was had a huge influence on my life, a big mentor, towards me. And he really wanted me to be a doctor. I think he wanted me to be a mini version of him. And so he really pushed the idea of going and becoming a doctor, and then eventually getting into business, once, you have success as a doctor, because you would always have a professional degree to fall back on. Because my grandfather grew up during back during the Great Depression, during that era. So his mindset was, when you are a doctor, you can always find a way to make a living. And, businesses, once you have that professional degree, that gives you, it literally guarantees you some level of income, then you can go do business and other things. That was his mindset, and sort of the reason I followed that through.
When did you decide, oh, I'm not going to be a doctor?
It's a good question. So it was probably at the end of sophomore year here at Texas. So I mean, because I love Texas and I love spending time and met a lot of great friends and still have a lot of great friends from my time here at Texas. But I think at the end of sophomore year, I was like, you know what? I'm not really passionate about it. I had really good grades when I went to school here at Texas. So, because a lot of times people are like, oh, you must have struggled and that's why you didn't
Yeah,
become
you couldn't get through that chem class. Yeah.
And actually, honestly, I did really well and just it really came innately to me in a lot of cases, a lot of the science courses. And I've always been very, math driven as well. But like literally at the end of sophomore year, I was like, I'm just not passionate about having to go after, getting done with college here, having to go another 4 years of school and get a, medical degree and then have to do a residency for so many years. And I was like, I'm ready to just go make money.
That's what I was saying. It's a long time till you make the money. Yeah.
Exactly. And I was very in sophomore year, I was very entrepreneurial, both freshman and sophomore year, I was very entrepreneurial doing different things. And, had a job, and I was just like, you know what, I've got 2 more years of college left and really just want to graduate and maybe take a year or two to, sort of look at business or look at other options. And so I called my grandfather. It was like, hey, and I called my mom. My mom first said, call your grandfather and talk to him. So this shows how much respect my mom had for my grandfather and really all my family members. Because he was such a huge influence, a positive influence on everybody. But I called him. I was like, I'm thinking that I want to maybe switch majors and maybe not go down the path of being a doctor. He's like, that's crazy. Like, why would you do that? Like, you only have 2 more years left and you'll be on to medical school. And so he convinced me to continue down the path. And he was like, if you don't want to go to medical school, you could always do optometry school or dental school and all these other options. And I was like, wow, I just opened up a can of worms. That wasn't what I was expecting the response to be. But so I continued down that path of being a biology major. But that was to answer your original question, because I could go on a tangent here, but it was sophomore year. That was the first time I realized that, hey, I don't really want to be a doctor and I really don't want to continue being a biology major, but I was already pot committed. So I continued down that path.
Okay. And you said you were entrepreneurial. Did you start a business when you were a freshman or sophomore?
I did. So I started a couple different things. One is I had bought vending machines. So myself and 2 other roommates, we went out and bought a bunch of vending machines and had these candy machines and stuffed animal machines. That were, again, it wasn't making the type of money to support a lifestyle like what it would cost today, but it was making a little bit of money here and there. And then we also had gone out and started selling like pagers, like at the flea market and things like that. And I was always looking at different ways to try to make money. And some of them worked really well. Some of them didn't work as well as you would expect.
When you look back to your time at UT, like what's one of your favorite memories?
It's a good question. There's so many great memories and so many times just hanging out like on 6th Street. Like I can't, so I had a lot of great times. Probably my best memories are, freshman year and just going through the process of rushing a fraternity because I was in SAMI.
Okay.
And just, meeting a lot of different people during that time period. And then just that transition as you went into your second semester freshman year and being able to spend more time like on 6th Street, because the first half of the year you're really focused on the fraternity and sort of getting that ability to really learn the 6th Street lifestyle. So that was probably the best memory.
You really like 6th Street. It's crazy though. Now as an adult, when I go on 6th Street, I'm like, oh, don't like it at all.
Yeah, no, it's I can't get out of there quick enough. Like it's literally someone came to town like probably 6 months ago when I was here, and we drove by for like 10 minutes, and I was like, it's too chaotic.
It's too chaotic. How did I do this when I was, yeah. Okay, so you graduated and you didn't go into med school, but you immediately started working and kind of working in what you're doing now, I guess.
That's right. So I got a job with General Motors and GMAC Commercial Mortgage, which was owned by General Motors at the time. Had a group that specialized in doing like hotel financing. It did some restaurant financing and equipment financing and so forth. So I got a job in that division that was a balance sheet using General Motors money to make these loans. And this is back in 1999. And so that was the first entree into doing what I do today. where I was, at that point in time, I was focused on originating and underwriting these loans that we were making to hotel owners.
Okay.
And so that was my first professional experience into the lodging space.
How did you pick that? Was it
It
like
was,
a career fair?
It wasn't the career fair. It was the at the time I had a couple of options because it was either go to medical school, right?
Yeah.
Or go to, go get a job. And this was one of the opportunities that existed at the time because I applied at probably 50 different places. And there was a lot of jobs with doing pharmaceutical sales, medical equipment sales. And this was one of the opportunities that came about through a family friend. And that's how I got connected to General Motors.
So you worked for two companies in your career before you decided to work for yourself.
Yep.
What did you learn when you were working for someone else?
Yeah, so it was really one company. It just happened to be our division. So our division of General Motors got sold off to a bank back in 2005. So it was technically I worked for the same, effectively the same manager, but our team was, uplifted out. But it was very cool just because I feel like I learned so much on the professional side of it, because again, I graduated college at 21. I quickly, learned how to be, professional, going from being on 6th Street to now also not being on 6th Street.
Yeah.
And quickly learning how to, because my background at this point was, biology and chemistry. And so I had to start learning how to actually model out transactions and understanding how to underwrite, making a loan and valuing hotel assets and other commercial real estate assets. So it was a very, quick transition. So
when did you decide to start your own thing and why? And it was Peachtree and it was a family office. It wasn't what it is today. It started off smaller.
Yeah, it was much smaller when we started, but literally in 2003, 2004, I went out and started making minority investments, with a couple of different people I've met. So I'd saved a little bit of money, started making some investments.
Just personal investments.
Personal investments, exactly, into hotel real estate. So that was my first, experience into starting to own hotel properties. In 2007, that's when I started Peachtree, myself and my partner, and I had met my partner back in 2000. And the two of us, had these dreams and aspirations of hey, we can go, create a portfolio of real estate that we could just own and just effectively be what a lot of family offices are today, where we just, basically pull together our family members. It would be my capital, my partner's capital, along with our family members. And we own a bunch of real estate assets, primarily hotel assets, under this portfolio. So we started that business in 2007. We went out and bought a bunch of hotels back in May of 2007. We bought a bunch of land sites to develop these hotels. And when I say hotels, these are, branded hotels under the Marriott, Hilton, Intercontinental, Hyatt flags. And these were primarily select service type hotels Hampton Inns, Hilton Garden Inns, Marriott Courtyards, Residence Inns. And so we went out and made a bunch of investments before the great financial crisis. And we thought we were the smartest guys in the room, and then quickly realized we might be the dumbest guys in the room. So
why hotels?
Why hotels was, at this point in time, from a professional perspective, I had the most knowledge in that space. Because I had financed well over 300 hotel projects from the time that I was at General Motors or GMAC to being transitioned into Silverton Bank. And so I had, had a lot of knowledge, had a lot of relationships in the lodging space, was very comfortable investing into hotel properties. And it really paid dividends because as bad as the great financial crisis was, we actually thrive through that GFC. So, the great financial crisis being the GFC, we thrive because we not only did the hotels we invest in, fully recover, where we didn't lose any money on those investments. We actually made a decent return across the investments that we made pre-great financial crisis. But we were able to very quickly transition and play offense in the GFC. And so we bought up, and that's how I really grew my business, is we started buying a lot of distressed debt on hotel properties. On other commercial real estate assets as well, like busted subdivisions. We bought, debt against retail properties and small office, but we had a lot of success in that note trade. And then we also continued to buy distress hotels in that 2009, 10, 11, 12 time period. And that was really the springing board where we transitioned Peachtree from being more of a small family office or a small investment manager to being really a private equity firm that was focused on investing through, credit as well as equity across commercial real estate and hotels.
So those hotels you were buying on that original thing, just so I understand, were they new ones being built, or were you buying ones that had debt, or ones that were in distress and needed somebody to take over, or all the above?
Yes. I mean, we were buying debt secured by hotels.
Okay.
So in a lot of cases, we were buying loans that a bank would hold, like a regional bank or a community bank. We were buying hotels where there was like a great example. We bought a hotel from a group in San Antonio, Texas, because at this point I was living in Atlanta. We bought a hotel right off the Riverwalk where it was a local group that owned the property that was under, a level of distress. And the bank ended up doing a short sale, but we bought it from that ownership group, and the bank consented to allow for the sale to occur.
And you're not managing the hotel, like
And
the
we
personnel, or you are?
We are.
Okay.
Yeah. So like when I originally started the business in 2007, we were not. Like
Okay.
I was like, I have no desire to manage a big team. I was like, let's just, keep this small. 2008, 2009, I was like, when we had the great financial crisis and I saw the revenues of all our hotels just dropping off a cliff, I was like, wow, I've got personal guarantees on all these loans I've taken. So I was like, I got to play defense here and protect my positions. And that's when we started to internalize the operation side, because we were using third-party management companies to run the hotels. And so we actually set up our own operation platform to run the hotels we owned back in 2008, 2009.
That makes sense. Like, because if it's your money.
Well, it's our money, and it's by no means am I a micromanager, but I tend to want to know everything that's happening, and it allowed me that visibility to see exactly what was happening and that transparency. And that's why we internalized and got away from these third-party management companies.
So would you say in those beginning years, like, were you a big risk taker?
Yeah, I would say, literally, I would say I was a huge risk taker. Probably,
Okay.
In hindsight, because you got to put it in perspective. I'm 48 now. Back in 2007, so I guess that's 18 years ago now, which is crazy to think. So I was 30 years old, 29, 30, and when I was starting Peachtree and so forth. So like I was like, I was naive to the world, right? Like I thought, oh yeah, this isn't that risky per se, but it was much riskier than I probably realized. And probably the biggest lesson through that time period is understanding leverage. When you have debt on properties.
Mm-hmm.
Because I was a banker by trade at that point in time, so I did have an appreciation for debt, but having too much debt is the challenge when you go through these down cycles. So
Yeah.
if it's like a great financial crisis, the pandemic that we've gone through, or even the last couple of years through this whole entire recalibration that you're seeing across commercial real estate with asset values dropping and just dealing with a higher for longer interest rate environment. If you have too much debt, you can have the best located property, but if you have too much debt, that is going to really drag down your returns or potentially create a negative outcome.
So from where you started to where you are now, it's like I can look at your website and read. It's like you have over $13 billion of assets. Is that right?
Well, we've made over 13 billion, so close to 15 billion of total investments.
Somebody goes billion with a B, and I was like, yeah, it's
right.
billion with a
billion
B.
with a B, yeah. So we have under management, we have a little under 10 billion today. So
Okay.
closer to like 9 billion or so
Okay.
of total assets under management across our credit as well as equity book.
Okay.
And over the last 18 years, obviously we've grown the business, but it's very diversified across credit investments as well as equity investments in commercial real estate, hotels. We own a lot of different platforms that do direct lending
Okay.
on hotels and multifamily, industrial, retail properties. We also buy a lot of debt. We have a capital markets team that covers a lot of the regional banks where we buy debt from those financial institutions looking to deleverage their exposure. And then we also own a lot of properties, hotel properties. We own industrial. We're always looking at other property types to add to our portfolio. And then we operate and asset manage everything internally as well.
Yeah, because if I Google you right now and you look in the news, there's so many properties that you guys are currently working on or investing in that are big, like hotel in Nashville, right? Or
Yeah.
different things. Like if I looked right now on the news. Okay, so when you think about what you're doing now, and if you're at a party and someone says, "What do you do?" Like, what do you tell people you do? If it's a short, like 2-sentence answer.
Right. So typically I just say we do private equity and commercial real estate. And I
Okay.
keep it very vanilla.
And they're like,
then,
"Oh, great, cool."
yeah. Well, yeah, and all they hear is commercial real estate. And so in their minds, I would say half the room's like, "Oh, you must own a bunch of office properties." And it's, because they hear commercial real estate, they think office. Well, commercial real estate means so much. Like you've got retail, you have clearly office, multifamily, industrial,
Yeah.
hotels make up the commercial real estate ecosystem. And because I found when I say hotels, that just creates a whole nother discussion. But it's usually it does lead to more questions. And I try to keep it very simple because you'll lose people very quickly when you say you're doing lending or investing in credit, and you start talking about owning properties. And then when it comes to the hotel side, they're like, "Wait a minute, doesn't Marriott and Hilton own all these properties? Like, what's your involvement?" I'm like, "Well, no, we're a franchisee of Marriott and Hilton, and we actually own the real estate." And they're like, "Oh, well, Marriott and Hilton operates it, right?" And you're like, no, they don't really. I mean, they do operate in certain cases, properties for certain ownership groups, but the majority of the hotels out there in the U.S. are owned and operated by someone like me.
Yeah,
And
which we would never know. Like that's
Exactly.
wild.
Yeah.
Stuff we don't know. And then like as you said, you're so diversified. Is that because you have to be, or is that just how your brain works and you just want to keep expanding into other ways to make money?
So it's more how my brain works, I think.
Okay.
So it's more to, just create sustainability to our platform, which I think has worked really well because what happens is there's times where you want to invest in credit, in commercial real estate where you're like, okay, I don't want to be last dollar equity exposure like the last 3 years. And our credit book has really grown over the last several years. Although we've been investing in credit since 2009, it's really grown substantially because it's hard to make equity investments the last several years in real estate because of this higher for longer interest rate environment. You've had less, properties trading. It's harder to make deals make sense when you're developing because of the higher interest rates.
Yep.
But then on the flip side, investing through credit makes a lot of sense because you're investing at 60 to 70% of the current value. You're giving someone a loan and you're able to clip that higher yielding coupon because interest rates are higher.
Yeah.
And so we're able to sort of pivot, when something's happening in the market, we're always able to find those opportunities. And we've been able to do that many times over, make those pivots like during the pandemic where we bought a bunch of debt, bought a bunch of, distressed, assets, distressed hotels. We're doing that now, obviously, on the lending side, and we're pivoting back to buying real estate because it's starting to become interesting again to buy real estate because you're starting to see that recalibration, repricing of assets.
Okay.
That's creating a more favorable
let's talk
environment.
about real estate real quick. But first, okay, so when you talk to somebody, who is at McCombs now or is a student and they see like where you've gone from here to here, which is a big jump, and it's hard
Sure.
to know how to get from here to here. Like, what's the thing that you think that you were really good at?
Yeah, so I think probably the best thing is I'm probably really good at, just making a decision and being decisive and actually moving it forward. Because what I find is, and making pivots too, but what I find is people are not very decisive. Like people say, "Hey, I want to go buy something," or "I want to go, they want to make a decision on something, but they actually to do the action and actually move forward and follow through. That's where people sort of fall apart in a lot of cases. And so just following through, like with starting Peachtree, for instance, not only did we go out, we set a goal to go buy assets, which we did, unfortunately at the worst timing, before the great financial crisis, but it was, turned out to be great timing. But then we weren't afraid to continue to be decisive and continue to, make pivots and go out there and buy, debt assets. And that created a new business line for us. And so just being decisive, continue to be entrepreneurial and gritty, I think that is a huge advantage and something that, that I've been really good at and our company's been great at too.
Dumb question, but as somebody who owns hotels and invests in hotels, what's your hotel point game like?
My hotel point game.
Yeah.
Okay. It's a great question. It's, fortunately, like I feel like when I fly, like that's probably like because I fly Delta pretty much as I can. Although when you're here in Austin, I feel like you got to hit all the airlines because
You do. There's no option. There's no singular one. Yeah.
Right. So it's I would say for hotels, just because we own Marriott, Hilton, Hyatt branded assets. And so I tend to I usually probably less concerned about the points, although.
Do you stay in the ones that you own?
In some cases, I stay at the ones we own, but also we get discounts.
Oh,
so we
okay.
get employee rates and things like that.
It's
and
nice.
So it's very nice. So a lot of times I play more of that game than, and then I'm also big on which hotel has the better amenities, like a fitness center. I'm big on the fitness centers, because I work out a lot in the mornings. So I'm looking at those types of features.
Okay, good to know. Back to your time at UT. Do you have, looking back to your time at UT, a favorite place to go grab food?
Food, yeah. So Hula Hut was the place in my eyes. That was the best spot for taking a date or even going out with buddies. I used to love going out there, and then so that was probably my favorite restaurant.
Was it all about the ranch? That cilantro ranch
Cilantro,
that they have?
Yeah,
whatever
exactly.
it is.
The dip.
Yeah, the dip.
Yeah.
And you're involved here at UT too. Like, you come back. I always hear you're just the biggest UT guy.
Yeah, I come back here a lot, so I do. I try to do as much as I can. And my daughter actually goes here now too, so she's a freshman. Yeah.
How is that when your daughter got to go here?
It's pretty cool. So it's super cool to see that. So,
yeah.
Cool.
Well, thank you so much for coming in and hook 'em horns.
Yeah, hook 'em, and thank you for having me. So.